Welcome back. You're with us here on Halftime Report. On to corporate conversations. Then we are being joined by the management of Ceigall India. Ramnik Sehgal, the MD and CEO, is joining us on the show now. Mr. Ceigall, good afternoon. Thank you so much for joining in. I wanted to start off by asking you about how the third quarter has panned out so far for you in terms of order inflows, because the first half was a complete washout, right? So what are you expecting your order inflows to be in the second half of the year? And if you could give us a full year number as well.
First of all, thank you so much for having me over. So, at the time of IPO, we have guided our investor that we'll plan at least 5,000 crore of the order book value. And we've been so lucky that we've already secured about 4,000 crore, in which 2,500 crores itself is two projects from Ayodhya. That's northern and southern Ayodhya bypass. And there's a 900 crore, 899 crores Odisha Bhubaneswar metro, which is almost 11 kilometers of the viaduct, one of the longest viaduct metro in country. So then we got another 200 crore project, which LOA is still waited. And 150 crore was a Kanpur Central ISBT project. So as per what we guided, only 1,000 is the shortfall, and we still have 3 months and 20 days.
So, right. So in that case, what do you think you will end this year with in terms of order inflow, order book? And, I remember during the IPO when we had this conversation, you did say that you always bid for contracts based on a targeted EBITDA margin itself. So what's your target for the second half of this year in terms of order inflow, execution, and what do you end this order book with this year and margins?
So we have already achieved what we said before in first 2 quarters. In fact, in first quarter, we received a bonus also of about 18 crores. And inflow, we've already have got 4,000 crore projects. We've already quoted for 14,000 crore projects, and we intend to bid for another 15 to 20,000 crore in near future because we can see a lot of visibility. And, as I said before, we don't have a pressure of getting the contracts. So our EBITDA margins, which we typically follow, is about 2-digit. And we always try to maintain that 2-digit EBITDA margin, which is about 14.5% to 15.5%. And the pure EBITDA, which comes from the EPC, is about 12.5% to 13.5%. And rest is the other income, which is royalty, bonus, or awards. I'm happy to announce, we've shared already with the BSEs, the exchanges, that we have won an arbitration award close to 54 crores last Friday. And the award has been in our favor, and that's with plus 12% interest till the time it is realized in our accounts.
Right, Mr. Ceigall, please stay on. We have more questions for you. We'll come back to you right after this short break. We continue our conversation with the management of Ceigall India. Stay tuned.
Welcome back. You're watching us here on Halftime Report. We are still in conversation with Ramnik Sehgal, who's the MD and CEO of Ceigall India. He told that he'll bid for another 15,000-20,000 crore worth orders in the remainder of this year with 14.5% to 15.5% EBITDA margins. And order inflow target this year has been 4,000 crores as well. So let's talk about the other parts of the business. More importantly, the balance sheet as well. You had looked at repaying some of your debt with the funds that you got in the IPO. So what does your debt stand at right now? And what is your quarterly finance cost run rate likely to be? If you could give us a sense on that. And also, the remainder of this year, what is the kind of order win that you expect? Even if you bid for 15 to 20,000 crore worth orders, given your execution run rate, given your hit ratio, what are the kind of orders that you expect to win?
So thank you once again for having me over. We have already won 4,000 crore. We have already quoted for more than 14,000 crore. And of course, we tend to bid for more, around 15 to 20,000 crore, more projects till 31st March. Our run rate has been almost, say, about 20%. So if I say 14,000 crore, we target to get at least 2,000 to 3,000 crore. But, before that, what is there in a mind as a promoter and as a management thought process, that we have to have our EBITDA margins intact. So which I discussed before, that we need to have a 2-digit EBITDA margin. That's more important, because the good thing about a company is geography-wise, we are spread in about 14 states. We have 11 verticals with us. If we don't get a good order in roadwork, doesn't matter, we'll get it in elevated. We don't get elevated, we get in railway. Not railway, then we have in airport. So we have 11 verticals. So winning an order and visibility of new projects is great in near future. And if you talk about the projects which we have got, Ayodhya, we won 2 projects together, 2,500 crores.
Mr.
And it's
Mr.
about-
Ceigall, the question that we were getting to was the fact that what does your current debt post the IPO stand? We get the fact that you're trying to win around 3,000 to 4,000 crore orders worth more, considering your 20% success ratio. What is the current debt on the books now post the IPO, and what is the current finance cost that you're running at, and the ratings that you have received from India Ratings right now? Do you expect this to get you better cost of funds going forward as well?
So good question. We have reduced 62% of our debt, close to 413 crores from our IPO proceeds. And, this new rating, which is AA minus, of course, that will give a edge on our financing cost. And of course, the financing cost will be reduced. If you typically ask, we take only and only mobilization vans against our projects. Otherwise, we don't need any debt initially for any of the projects. And we invest money in our equity for our new HAM projects or existing HAM projects. We already have put about 230 odd crores in our equity in existing HAM projects. The first HAM project is already completed, which is AAA rated. And going forward, the visibility in cashing these projects by either selling it, we have a lot of opportunities in the market. So equity visibility is not a problem at all. And, debt raising is only against the mobilization vans against these new projects, which is, as I said, 62% we have already paid off from the proceeds of the IPO, about 413 crores.
So you've paid off 413 crores. What does it stand at right now?
It should be around 300 crores.
All right, we take that point. Thank you so much for joining in and giving us all those details. We wish you good luck, and we will touch base with you as and when we get more order updates and execution updates from you itself. Take a short break, but don't lose sight of the market. We have the Nifty at the low point of trade, so we'll talk about all things F&O on the other side of this quick break.